Hello everyone, this is Spencer with Numbers Up Finance. Today is Friday, March 22nd, and we are back with another market wrap video. In this video we will be discussing the significant price action that happened on Friday, as well as highlighting the entire week as a whole. So, starting off, let's get into the daily charts for SPY. The bears had themselves a day today. Wow, very significant. As bullish as yesterday was in terms of price, today was even more bearish for a multitude of reasons. But let's just start off by going over the price. Yesterday we had an impulsive break of the level that everybody has been looking at, this 281 to 282 price level on SPY, and we had an impulsive break of that. Now we did mention that it did not come with the volume that we would have liked to see for a bullish breakout. And we hinted that there's an increased chance that it gets faded, and sure enough, today it got faded, and even more so. We are now well below that level, that triple top level that everybody's been looking for, and it looks as though that might have been a bull trap. What is also significant to take into account on the daily charts for SPY is that both the MACD and the RSI after today's bearish price action are now pointing down. Momentum is heading downwards. This looks like it could be the start of a confirmation of the bearish divergence that we've been talking about. You can see the little blue MACD tail here. Before it was starting to head up very slowly, but today is the first day where it's actually starting to point down just a little bit. It's just a little bit, and it could just very well push back up next week. But we'll see. RSI actually took a much more impulsive dip down, but again, both of them are indications that the momentum is heading downwards. Now, taking a look at the weekly charts for SPY, we see much of the very same. We're only going to look at the price action here, but what we can see, this is the level that everybody's been looking at, including ourselves, and we popped it intra-week, but we closed right on that, which is the significant part. We have not had a weekly candlestick that has impulsively broken this level, and there's no reason, if you're trading on the longer time frame, to think that we are heading higher. Anything is possible, but these little intra-week pops of price levels are very insignificant, especially when they're paired with fundamental news or different catalysts, such as the Fed minutes that we had this week. The Fed came out and released a statement. That's the kind of catalyst where, sure, intraday or even a day or two, you might have these long rallies that might push the market a percentage point or two in one direction or another, but it's not significant in the long haul. Most of that is already priced in. The next chart that I want to take a look at is QQQE on the daily time frame, and the reason that we're looking at QQQE instead of QQQ is the fact that QQQE is equal weighted between the 100 different stocks within it. QQQ has been performing a little bit different than it should, or maybe that the market has actually been indicating. The reason for this is just some of the top heavily weighted tech stocks like Amazon or Apple have been performing very divergent from what the market is telling us. But QQQE, you don't have that problem so much, and that's just because all 100 stocks have equal exact weighting. Now, taking a look at this, there's two things that are very significant about this. The first one is the price action. We can see we came up, made just a barely all-time high, but really it's like we're testing this different high. It's give or take a percentage point or so. Nothing too significant. We're testing the all-time high again. Second thing is that we are looking like we are forming a textbook bearish divergence. You can see on the MACD, momentum is sharply pointing down, but the price was still moving significantly up. Now that we've put in this red candlestick, we are starting to head back down on the momentum. Maybe that's a sign that more is to come. It's also important to note that if the entire market, the broad market, we're talking SPY, the S&P 500, and everything else, if that's going to be having another leg down in what could be a possible bear market, it will most likely be led by the tech stocks, which is what QQQ is a ETF of. So it's very important to keep this in mind when you're doing analysis. Taking a look at the weekly chart for QQQE, fairly interesting. We are actually extending a weekly divergence pattern that we have, a bearish divergence that is. This divergence has been building up for well over a year now. We just made a higher high, but the momentum is still heading down, and that's given that this blue MACD line starts to curl down soon. which if in the next week or two we see some follow through to the downside, this would start to be heading downwards, and that would be a confirmation of that divergence. And the last thing that I want to go over for this video is TLT, which is it's an ETF for 20-year bonds, and this is probably one of the most significant reasons why today was a very bearish day in my opinion. But you can see today that we had an impulsive move up. We were testing a 1.5, 2 year very strong resistance zone. You can see there's this couple dollar zone region here where TLT was continuously coming up and testing and getting rejected off of. And today we finally broke that, and we broke it, and we saw the volume follow through that we like to see with these breakouts, and we absolutely smashed right through that resistance. Now, why is this significant? Well, what does TLT represent? Usually institutions, hedge funds, other very smart, well-educated market movers, when they have fear in the market, they take their money out of the broad market indices, so SPY, QQQE. They take their money out of the assets, the other stocks, and they put it into bonds, which is what TLT is an ETF of. And so when institutional fear increases, you tend to see TLT spike. And if you need evidence of this, let's take a look at the previous leg down that we had just a couple months ago. Let's take a look right here. This is December 3rd. You can see in the top left corner. December 4th was the last big gap up that we had in it, and since then it ran up a little bit. But let's take a look at how that correlates to the broad markets. So we saw that last significant gap up, the last significant price increase that we saw in TLT was December 3rd, December 4th. Sure enough, December 3rd, December 4th, these two candlesticks right here were at the very top before we had almost a 20% leg down in SPY. Now, that's not to say that it's a guarantee that we're going to have that next leg down, but it's a very powerful bearish indicator that we had today. And so I'll leave that there. If you liked the video, be sure to leave a like, comment, subscribe. We greatly appreciate it. Until next time, make sure you keep your numbers up.